Well, folks, the stock I have called my next 10x, my next Elva Beauty stock, the stock that will return me 1,000+% gains, in my opinion, over the coming years. They just reported earnings this morning, okay? I want to take you through the numbers, what was good, what was bad. Is that stock still on track? Do I think it's going to be my next 10x still? All my different opinions, perspectives. Do I think that stock's going to get out of the gulag this year? I'm even going to share that perspective as well, which the gulag is the under $5 club. So we'll get into a bunch of that in this video. That's going to be the core of this video. But before we get into that, obviously we got to talk about a few other stocks that are making some massive moves that are very important, obviously, to me and maybe to some others out there, okay? One is Palantir. So Palantir, unlike the shorts and the naysayers are saying, oh, it's going to lose its gains today or something like that, never lost its gains. Absolutely had an incredible day. Stock finished up almost 25%, okay? Now, the thing I think is important for me to remind the Palantir bulls out there is this is just the start, okay? This is just the start of this move in regards to stock price. And the reason I think this is important is, you know, you see the stock move up 20%, 30%. I don't think momentum is going to stop in Palantir. It doesn't mean every day or every week the stock's going to go up. But I think continued money and momentum will continue to come into the stock, honestly, for the next year, okay? And that's regardless of market conditions, regardless of market conditions. And the main reason being is it looks like Palantir is on track to hopefully eventually get in the S&P 500 at the beginning of 2024. As long as they continue to put up profitable quarters. If they have one quarter that's not profitable, that could mess up everything in a major, major way, okay? But as long as they continue to put up these profitable quarters, which the company said they expect to do, the company should get S&P 500 inclusion at likely, I would say, in terms of it actually getting in, it would probably be very early in 2024, in my opinion, okay? So obviously, if you continue to see them put up profitable quarters, continue to come in with nice numbers, the stock's just going to continue to attract more and more money, because once you get an S&P 500, you're going to eventually see, massive funds have to buy the stock. And there's a ton of people that obviously buy these companies ahead of time, knowing they're going to get an S&P 500, okay? And now, the very important thing, okay, very important I say this, for everybody that is interested in the stock and those sorts of things, okay, is I have seen something play out in front of me that was absolutely brutal to watch play out, okay? And what this was is when Tesla started going on its first run and it went up 20, 30, 40%, I watched a massive amount of Tesla bulls who had been in the stock for a year, 2 years, and didn't have any gains, finally make 20%, 30%, 40% on their shares, and they sold, okay? And they sold because they had been holding it for 1, 2, 3 years. They hadn't been making any money. And to finally make 20, 30%, 40%, they were so excited about that. And they thought that was as good as it got. Okay, and they missed the hundreds and hundreds and hundreds of percent gain in a stock like Tesla, okay? And I see the same exact phenomenon will happen with Palantir, where you're going to have certain folks that have been in the stock for 1 to 2 years, and, you know, as soon as they get some gains here, they're going to end up cashing out shares, and they're going to miss the hundreds of percent gains, and they're going to chase what I like to call the breadcrumbs money rather than chasing the loaf of bread, okay? When you have companies that have best-of-breed products with game-changing management teams and employee forces, which is exactly what Palantir has, okay? You let those babies go on their run. You throw them in the filing cabinet, okay? You don't have to look at your trading account every day. You don't have to pull up your portfolio every day. Like, let it be. Let it be what it's going to be, okay? You're going to have fluctuations in the market, the stocks. Don't get all caught up into that crap, okay? Just remember the long-term focus. Remember where that company's revenues are trending over the coming years. Remember how great its products are. Remember where its net income is going over the coming years, okay? Think about those sorts of things. You don't have to cash out profits in great companies in a very short amount of time. Otherwise, you're just going to be the guy that looks back with regrets and like, I saw it coming, but, you know, I chose to cash out of that stock and take a little, you know, breadcrumb money rather than chasing that loaf of bread, okay? So I think that's very important. I let everybody know that, okay? Fubo is still running at this point in time, right? And stock is now up 72% in 5 trading days, okay? 72%. Now, the important thing to understand about a stock like Fubo is, yeah, it's up 72% in 5 trading days, but like this is a stock that had been so devastated. I mean, even today, it's a $2 stock roughly, $2, okay? And this was a stock that at the peak of the FOMO hype cycle at the beginning of 2021 was like a $40 stock, okay? So the thing you got to understand is a stock like this, yeah, the percentage gain looks crazy, but it has a long way to go. And the fact is now that this is a stock that's officially bottomed now. And when I say officially bottomed, I mean it won't hit a new low. Why will it not hit a new low? Because they basically confirmed that they don't need to raise any more money. Okay, and so that in itself is like takes bankruptcy off the table now. Okay, and never mind that, you obviously compound things that their business is actually performing much better than folks expected. Their losses are cutting down massively and expected to continue to cut down massively. Their cash flow is going to get in a much, much better place and is getting in a better place. As all those things transpire there, obviously you have a very positive effect on the stock. But I mean, think about this, okay? This stock could go up 500% from here, 500%, and would still be down a crazy percentage from the 2021 highs, okay? And so that's just very important that you take these things apart and just understand, like, these sorts of stocks are going to go on some crazy runs, and as long as they make it through and they do what they're supposed to do, like, there's a long way to go in that game, okay? A long way to go, okay? Now, in regards to my next 10x stock, what's going on here? What do I think about this? Is it coming out of the gulag here? Do I still believe that it's going to be my next 10x stock? All those sorts of things, okay? Let's talk about this. Honest, HNST. So they reported earnings this morning. Obviously, in terms of what investors thought of the earnings, obviously they thought it was positive, right? The stock was up about 11% here today, okay? So here's what's going on with Honest, okay? So in terms of, I always like to look at, like, what is the company trying to tell us here in regards to this, right? So first quarter revenue increased 21% versus the prior year. I got to say, I was shocked to see that number. I was not expecting 20+% revenue growth, not even close to that, okay? That was shocking for me to see that. They announced a transformative initiative to enable growth. They also raised their full year outlook, which I'm not surprised because of how strong that first quarter came in at, okay? Now, the strength of our Honest brand is reflected in our first quarter revenue growth of 21% and tracked channel consumption growth of 30%. That's what's very important, okay? That basically means, like, when they get onto the store shelves, like, they're moving product. And I mean, based upon my Target walks, right, which I know people love to laugh at me because I go walk around stores and see how products are moving and take pictures and stuff. Laugh all you want, okay? Laugh all you want. Make fun of me, whatever, okay? It's what I do. Whenever I go on my Target walks, I can tell you, Honest product moves. Like, I'll see, oh, they got this many products, and then I'll go back a few days later and, like, those products are out, okay? The product moves, and that's exactly what we see in the data. With well-balanced growth across digital and retail channels, both up over 20% in the quarter, we remain confident about our omni-channel approach in making Honest products available when and where they're most convenient for consumers, said Carla Vernon, which this is Carla's first earnings, by the way, leading Honest here. Given our focus on restoring the strength of our business model and driving long-term value creation, I'm excited to announce that we have launched our transformation initiative in the first quarter. This initiative is designed to improve our cost structure and enable growth. We expect this initiative to drive profitability, that's key, and sustain shareholder value by focusing on three primary pillars: brand maximization, margin enhancement, and operating discipline, okay? Obviously very, very key in regards to this, right? The thing with Honest is they have a great brand, they have great products, phenomenal, but they haven't been, just to be quite frank, since this company went public in 2021, they haven't been blocking and tackling, as I like to say, right? Which anybody that understands football understands my analogy there, right? It's like they got this amazing brand. They got, more and more consumers experiencing the products, loving the products, buying them more often. That's great. From diapers, wipes, obviously beauty products, right? Skincare routines, makeup, all that stuff. It's phenomenal. Baby clothing, everything like that. But the issue is they just haven't been running the business good enough on the financials front, okay? The blocking and tackling, as I like to call it, okay? The brand management's been phenomenal. And so they're going to obviously continue that. Margins is a key with this company, okay? Now, in the first quarter of 2023, the company began executing a broad-based plan reflecting the transformative initiative announced today. The plan is designed to build the Honest brand and drive growth in higher margin areas of the portfolio. That's key, okay? Margins is what everybody's going to be keeping their eye on for this company for the next several quarters, and honestly several years, but really over this next several quarters. strengthen the company's cost structure, drive focus on the most productive areas of the business, deliver greater impact on brand building investments, and improve executional excellence across the enterprise. Okay. Now, here's the important parts. Margin enhancement. Expand gross margins by exiting Europe and Asia. I'm guessing those markets weren't doing well for them, okay? So they're going to exit those markets. Now, the impressive thing is, remember this, okay? Remember this. The company said they're expected to grow revenues this year, but yet they're exiting the Europe and Asia markets. So which means essentially, if this company is going to grow revenues and they're exiting those markets, then that means that essentially Honest is going to grow in a pretty epic way in the United States of America and North America, okay? That's the bottom line with that. So my guess is they were losing a bunch of money in Europe and Asia, and they're like, it's not worth it for us to be in these markets. And it probably takes a bunch of, let's call it time and attention away from the management team. Discontinue low-margin product lines and SKUs, expand the role of margin accretive products, and drive cost activities. What this smells like to me is margins are going to skyrocket for the next many quarters. For the next, I would say 4 to 8 quarters, you should see margins increase and increase and increase and increase. Operating discipline. Build a culture of executional excellence. Take focused approach on trade and promotional activities, and manage working capital through inventory reduction. If you have a ton of inventory, right, you have to house that inventory somewhere, right? You got 1 million diaper boxes. You got to put those diaper boxes somewhere, and that costs money to store all that, right? In the first quarter of 2023, the company recognized $7 million of costs related to the transformation initiative. For the full year 2023, costs related to the initiative are expected to be in the range of $10 to $15 million, of which $6 to $8 million are expected to be non-cash. That's important, okay? Very important, non-cash. The initiative is expected to result in annualized benefits in the range of $10 to $20 million, and the company expects to begin seeing those benefits in late 2023. So basically, they're taking a bunch of kind of one-time costs in relation to this initiative that's going to hurt their margins and profitability, obviously in this past quarter, 1Q, and probably will hurt them a bit in the second quarter, but it should start going from basically it's a headwind against the company to a tailwind for the company here, okay? Now, this is important. If we go ahead and take a peek at their revenue on a year-over-year basis, the diapers and wipes business was up 23% on a year-over-year basis. That's incredible growth. That tells me they are stealing market share from Procter & Gamble. They are stealing market share from Kimberly-Clark. They're stealing market share from Huggies and Loves and Pampers and those other brands, okay? You don't get 23% growth without doing that, essentially, okay? Skin and personal care. This is a business I want to see grow much more over this next, I would say, certainly year, but also many years to go in the future, because I can guarantee you this is where we're talking big margins, okay? When you talk about skin and personal care, that's where big money is. As somebody that obviously has made insane amounts of money from Elf stock, that's exactly what I see play out here, okay? That's where the real money's at. Diapers and wipes is a cool business, but you're not going to make crazy margins on that business. Skin and personal care is a whole different game, okay? Household and wellness was up 81%, shockingly, over year. Obviously, it's a much smaller business for them, but it is growing very nicely. But do keep in mind, it's from the integration of baby clothing is a huge percentage of that, okay? So I think that's worth, keeping in mind as far as that goes, okay? Now, this is insanity, okay? Absolute insanity. This company, basically 50% of their revenue comes from digital and 50% comes from retail. And the reason that's so impactful is for CPG brands, like it's for the most part, they're like 90% retail and like 10% digital. The fact is, as digital becomes a bigger and bigger portion of, let's just call it the overall market, it means Honest is positioned very well for the next 10 to 20 years in regards to their brand. The fact that this much of their business already is coming from digital, where other CPG brands are trying to, still focus on digital strategies and figure it out. But the majority of their revenues come from retail, right? Physical stores, walking into a physical store. So that matters in a significant way. Now, gross margins, okay? This is very important. So gross margin for this quarter was trash. Straight trash. 24.2% in the first quarter of 2023 compared to 30%. We need to see Honest get back to 30% plus margins, okay? I believe they can do that, and I believe Carla will pull that off, and she will do that, okay? In the first quarter of 2022, gross margin included approximately 370 basis points of that initiative cost. So do keep in mind the margins would have been far better Far better if it wasn't for obviously the initiative cost there, okay? We're talking about 3.7 percentage points better. So you could say, it should have been something like 27.9%, okay? So it's not as bad as it looks, but still we need to get back over 30%. Including exiting portions of the international and sanitizing business and SKU rationalization. Gross margin was also impacted by higher storage and inbound freight costs and higher product and fulfillment costs, partially offset by the benefit of price increases and more efficient trade spending. This should cut down massively, in my opinion. The freight costs have been coming down and down and down. They might have some bad contracts they got in 2022, because a lot of times you'll sign these contracts. So once those end, they should be able to reduce those rates substantially, okay? And then higher storage, as long as they continue to bring down inventory, that's not going to be nearly the issue, okay? As far as net loss went, it came in at a horrible $19 million, but do keep in mind, that's including a $7 million cost related to the initiative, okay? That's compared with a loss of $15 million in the first quarter of 2022. So basically, it's about a $3 million improvement if you take off, that initiative there, okay? Nonetheless, we need to see, obviously, a lot of progress continue to be made here so we get to break even. As far as adjusted EBITDA went, adjusted EBITDA for the first quarter of 2023 was negative $10 million. That's including a $6 million cost to the initiative once again, right? So you could say, as far as adjusted EBITDA, maybe it should have been like negative 4-ish, something like that, as far as a number there, okay? Now, as far as their outlook goes, what do they see for their business moving forward? Following strong consumption results in the first quarter, the company is increasing its full year 2023 revenue outlook to be up in the low single digit versus revenue reported in the full year 2022. Now, once again, that's very impressive because they're exiting markets like Europe and Asia, okay? So they're expected to still be able to grow revenues despite a situation like that. So that's important to remember, okay? The revenue on a yearly basis, that is, okay? The revenue outlook reflects continued positive track channel consumption and the benefits of additional price increases in 2023, offset by the initiative impact of existing low-margin business, expected to begin in the second quarter. The revenue outlook also recognizes the company will be comparing against prior year pipeline shipments and supported significant retail distribution growth in the second half of 2022, right? That was them getting into different retailers. Adjusted EBITDA is expected to be in the range of negative $25 million to negative $30 million, which includes approximately $7 to $10 million of, or $10 to $15 million in costs related to the initiative there, okay? So that's very, very significant. It wouldn't be that bad if it wasn't for this initiative that, once again, it's a bunch of one-time costs, a lot of it non-cash, but it's a one-time cost of business, okay? The company ended the first quarter of 2023 with $12 million in cash and short-term investments, and they also have this $35 million asset-based lending agreement, which they signed in January 2023. As of March 31st, 2023, they haven't basically taken any of that, but it is just nice that the company has wiggle room, right? You want to have those options out there in case you need to dip into those options, which I think is important, okay? Now, overall, this quarter for me, this was Carla's first quarter, okay? It was a C-plus quarter. I would call it a C-plus quarter, okay, as her first quarter with the company. So I obviously love the commentary. I love the focus that they're going to focus more on the margins, all those sorts of things. But at the end of the day, it's talk, right? We need to see it in the numbers. And so, it's not like the numbers were good, right? The revenue was great. Let's be honest about that. The revenue was great, but it's not like the margin numbers were good. Even if you take out the initiative, the margins are still down on a year-over-year basis. That's not good, right? So a lot of talk. That's exciting. Good conference call, actually a great conference call, but we need to actually see this in reality. We need to see the margins improve every quarter for the rest of this year, okay? So basically this quarter needs to be pretty much the bottom for margins. We need to see the margins continue to improve in the second quarter, improve in the third quarter, improve in the fourth quarter, and then as we go into 2024. The losses need to get less as the year goes along, and we need to start getting close to break even in the third quarter or fourth quarter as those initiatives kind of obviously take effect in a major, major way. I don't see any reason why this company shouldn't be able to get too close to break even by the end of this year, nonetheless, here, folks, okay? So, yeah, I would give her a C-plus quarter, and hopefully things continue to improve here, okay? Now, they also just brought on this lady, Kate Barton, as a chief growth officer, which is an important position for the company, okay? Now, obviously, they hype her out. Carla hypes her out. Cool. Jessica Alba obviously hypes her out. Okay, that's great. But I want to know, what's her experience? Where's she coming from, okay? Here's the deal with this Barton lady. Barton joins Honest from her recent role as a chief brand officer of Magnolia, a lifestyle company founded by Joanne and Chip Gaines. In this role, Barton led high-performing teams across marketing, creative, and design. Barton was foundational to optimizing the company's brand strategy, omni-channel content, direct-to-consumer programming, and the successful launch of the Magnolia Network, a collection of original programming in partnership with Warner Brothers Discovery. Okay, interesting. This actually makes me more excited, okay? I'll be honest. Barton has deep experience in the beauty and skincare from her time as executive director of marketing for Estee Lauder's Avienda brand. Okay, I can never pronounce that. Is that how I pronounce it? Avienda brand? Where she was responsible for driving year-over-year share growth across North America, B2B and B2C channels. Prior to her leadership of Avienda, Barton was at Johnson & Johnson, where she managed global campaigns for Clean & Clear and led Neutrogena's global anti-aging innovation pipeline. She also worked at many leading food brands at General Mills, including leadership in Nature Valley Business, and she accelerated sales by nearly 15% year over year. Cool. This is a part that I think's most relevant, okay? Obviously, if we're thinking about the future of Honest and we're thinking about this company getting to 30+% margins and hopefully then 40%, 50% margins on a longer term basis, okay? It's going to be driven by their skincare business, by their makeup business, by their beauty business overall. That's where it's going to come from. If we're thinking about this company reaching a big profitability, that's where it's going to come from. And so her experience there in this called the beauty business, I think could actually be very impactful. I would love to see Honest utilize more influencers. I think that would be beneficial to them. I experienced like the power of social media and using influencers in regards to e.l.f. brand, obviously. e.l.f. has been popular for many years in regards to influencer space. They've done a phenomenal job there. And so I really want to see Honest get there as well. So I think it's an exciting ad. We got to see it play out. You can't get too excited about these things, but we got to see it play out here, okay? Now, next up here, let's talk about the stock price. Let's talk about where the stock price is going. Let's talk about kind of future here, my thoughts on this. Do I still think it's going to be that sort of opportunity where it's going to be the next e.l.f. and those sorts of things, okay? Because this stock's been in the gulag. The gulag is basically companies that go under $5 a share, okay? You go under $5 a share, you're now in the gulag at that point in time. Now, the important thing to understand about the gulag is many never come out, okay? Many never come out of the gulag and they're stuck down in the under $5 club forever and all of eternity until the company either goes bankrupt or they're bought by somebody else or they're just down there for years and years. Okay, certain companies can make it out of the gulag. And not only do they make it out of the gulag, they go on to prosper and do very well. Okay, and there's been a whole host of those companies over time. Two companies that come to mind in recent years, one is AMD. AMD was a stock that was all the way down to $2 a share, and they made it out of the gulag, and obviously we know what the rest is history in regards to AMD. It's one of the most phenomenal companies in the world now at this point in time, right? Another one in recent times that's come to my mind is Hims. Hims is a stock that was in the gulag, and it was down to, at the lows, I think it was a $3 stock roughly when it came to Hims, and it was stuck in the gulag, and they made it out, and now they're doing very well for themselves, okay? So you can make it out of the gulag. It's not easy, okay? So in regards to Honest, okay, do I think they're going to make it out of the gulag? The answer is yes. When do I think they're going to make it out of the gulag? Here's my opinion, okay? So I think they got a legit chance to get out of the gulag at the end of this year or the first half of 2024, meaning making it over $5 a share and back out of the gulag. And the reason I believe that this is a realistic chance here, okay, is one, this stock's already been priced for end of the world, basically, okay? The second component is how strong their brand is and how strong their growth is. Doesn't give me any thought to that doing anything than getting better and better and better, okay? The third component of this is obviously with all their cost-cutting measures, the focus on margin moving forward and things like that, I think we're going to continue to see their margin get better and better and better as the year goes along. And I wouldn't be surprised if in 2024 they're in a position that the entire year for every single quarter is 30% plus margins, right? Which gets you back into healthy territory. And then you can start thinking about how do we get to 35% margins and 40% margins, okay? So when I look at it from that standpoint and then getting to profitability, which I think, they can get close to break even at the end of this year and potentially push actual net income in 2024, the way I look at it, if you put all those pieces together, I think the stock could definitely get out of the gulag this year, and that's regardless of what happens in the market. It doesn't matter if the market goes down a bunch, because for a company like Honest, it's completely irrelevant. This isn't in the S&P 500. It has no inclusion into any of these big indexes or anything like that. So it literally doesn't matter what happens to the market. So that's my opinion. I think they can get out of the gulag end of this year or beginning of 2024 in regards to that. Okay. Now, is this still, in my opinion, the next 10x opportunity? I think it definitely has the potential to be there. They've got to prove it, though. They've got to prove it, okay? No different than ELF had to prove it. They had to prove it, right? When I got an ELF, that wasn't a gulag stock, but it was close. It was like a $7, $8 stock or so, right? And it was getting close to gulag, and then they proved it. They put up the numbers, and the numbers just got better and better and better and better, quarter after quarter, year after year, okay? And that's what Honest has to do. This has to be the bottom for Honest, and they have to just continue to get those margins in a better place, the profitability in a better place, right? The EBITDA in a better place, and the cash flows in a better place. And if they just do that and make progress and progress, next thing you know, it's going to be a $5 stock, a $10 stock, and then we have some fun after that, okay? And so it definitely has a potential, but they got to put it together, okay? And obviously, Carla is going to have to be instrumental in executing and leading this team to execute on that sort of level to get this company to where I think it can get to. It certainly has a brand to get there, and it certainly has the the products to get there. Now it's just about executing as far as on the financial front. So it's not going to be easy, but I can see it being done. I appreciate everybody joining me as always. Thanks so much for being subscribed, folks. If you're looking to apply to join my private group, that will be in the description area. If you want to, if you enjoy my content, you get a lot of value out of it, and you want to join my Patreon, and you want to see the moves I'm making in the market, plus be part of our Discord chat in there, then also check out the description area. That'll be the link to join us in the Patreon. Much love as always, and have a great day.